Hello, today is Friday. It is the 20th day of June 2014. My name is Derek and welcome to today's silver chart analysis. For more in-depth coverage of these markets and the move that occurred within Thursday's session, yesterday's video has a lot of information within it, so if you haven't seen that, tune into that one, I would recommend. I will go over quickly on today's action and then talk about multiple time frames of silver, and that will be the analysis for the weekend. Today's gain, 7 cents, which is mainly just consolidating sideways from yesterday's 4.5% up day. And within the sideways move, what did not occur, of course, was any large retracements. It didn't crush the market at least the day after the big gains. And further gains, although technically extended, really were not. Today's high was $20.98, 2 cents short of the 21 level. And the volatility was 1.94%, which is in or around the average day. Today we had platinum and palladium both sell off a little bit. Gold was down a little bit, but doing the same thing as silver, consolidating its gains as well. And of course, the key thing is if this thing continues to move towards the upside, then it's time to state that at least on the daily chart, it is in a very solid bull market, overextended and very risky to play the paper digital game for both the long side and the short side. And then again, when there is a retracement, I'll be looking at the key levels 23.6, 38.2% on the way down, as well as this band, which would be the most important one to really give indication of whether this would be either A, that of the start of the bull market for multiple weeks and months, or B, yet alone another failed move, which could set up a catastrophic short-term, mid-term fast move to the downside. When we look at these markets on multiple time frames, daily chart, it's obviously in an overextended market. It's one of those types of deals where it could very easily go up with little retracement, even significant amounts of multiple dollars. But again, at some point it's going to have to sell off. So it's bullish very much so on these shorter term time frames. When we look at the mid and longer term time frames going back a few years, we're seeing, well, the move took us from 50 down to 18 and change, and now we're close to 21. So we've gained 2.5 after losing over 30, down over 50% from the high. So long term, very much down a lot. And if you look back at multiple years, well, we were ranging sideways from 4 to 8 throughout the entire 80s and 90s. It got up to 50. It used to be $1.30 almost over 100 years ago. Is it up enough compared to other different commodity and asset classes? Different questions that I like to ask myself, but overall, I think regardless of how many upticks in a row, if you're buying physical at this point, if you're getting it for these levels, I think it's a no-brainer looking back multiple months and years in the future that it would be an amazing decision. Of course, this is what I personally think. Obviously, do your own research and see what's best for you based on your situation. Have yourself a great weekend. Bye-bye.